prices and then look at opportunities for monetizing, similar to what we did with the Vodafone transaction a few years ago. In addition to that, and obviously we believe that the value which was got was the right value, and we were comfortable with that. It's obviously addressed our debt issue, and this will reduce the group's debt by about 55%, maybe a little bit more.
I'll take forward the debt conversation in just a bit, but since you talked about Vodafone, let me swing this question your way. The buzz and speculation picking up on a mega merger idea and Vodafone. Let me get your comment on that.
Well, we've been out of the sector for a few years now, so I don't know. I'm not aware of the intricate details of what they've been talking about, but I suffice to say that the deal, when we did it with Vodafone, the company had little less than 100 million customers. I think it was between 80 and 90 million customers, and from there to see what Vodafone has done over the last few years. They've obviously invested a lot of money, but they've built a company now with more than 200 million customers. So they are clearly, they always are looking at this as a long-term market. And
would you be surprised if this were to happen, or are you, in a sense, anticipating it? Have you been anticipating it?
I don't know about this deal, but Vodafone as a company has looked at growth through acquisition like they did for us. So
okay, after that brief segue away from your business, let me get back to talking to you about your own business. And as far as debt was concerned, you said that it'll bring down debt significantly, the deal with Rosneft. But what about banks and about the return as far as banks are concerned? When has the money started to go back, or
no? Obviously, the debt reduction would take place when the deal closes.
Okay. So
and the deal is
March?
expected. No, before March, I said.
Okay.
Before the end of March, we should close.
No, so
that's when the reduction will happen.
So when do the banks start to get paid?
Well, all of it will happen simultaneously with the deal closing. So about the same time.
What is the outlook now as far as business is concerned, and specifically from a steel perspective? Because the cycle seems to have turned. There is hope that this will be sustainable at least right through 2017. What's your own take?
No, I think the commodity cycle has turned a lot. Significant improvement in all commodities, steel being no exception. We've seen significant pickup in iron ore prices, coal prices, steel prices, and all other commodities too. We are back to, I would say, mid-cycle levels. So it's not, we're not anywhere close to the top, but we are in mid-cycle levels. From bottom, we were last year we were close to the bottom, and the demand has even last year, even when we went through this crisis in the steel sector, we did not see a significant contraction of demand. It was just oversupply, and largely coming from China, which hurt the sector.
So that rebalancing and readjustment
has happened because Chinese government obviously is now much more vigilant.
And then the Indian government came into support.
Well, not only Indian, all the countries in the world have put restrictions on significant Chinese dumping, and Chinese themselves have improved the prices significantly. So I think we are back to a stable return scenario in the steel sector.
And demand, do you see demand picking up specifically in the backdrop of this large infrastructure push that is expected in the budget?
No, we certainly believe that demand will pick up. We are looking forward in 2017. We hope we can get significantly more pickup in demand than last year. Last year we were at about 6 to 7%, and we certainly are looking at a higher than that growth in the steel sector this year. Infrastructure pickup, roads picking up, and we think that the investment cycle has to come back. It's not yet. It's happening through the government projects, public sector, etc.
What is your own sense? I mean, you talk to your peers within industry.
Right.
Is there a sense that you get today that the private investment cycle is even on the cusp of a turnaround?
So I think what has happened is that, in the last 4 or 5 years, India Inc. Invested very heavily in infrastructure projects, whether it was the power sector, all of the sectors, including the steel sector. And there was a period of the demand did not grow as quickly as we had all expected. And so we had a lot of capacity which was still not fully absorbed into the system. And I think we are getting to a stage now where a lot of that capacity is getting absorbed. Once that is completed, and all the existing investments are starting to give returns, and the demand is picked up. Only then can we see a investment cycle. And so I hope you're getting close to the point where in the current year, most of the demand should get picked up, and then we can see a pickup in investment. So it's linked to the existing assets first going to work before we can go into a...
But what is going to be the focus area for you now in 2017, given the fact that to some degree or to a large degree, at least some of the debt-related issues have been or will be put behind you fairly quickly or shortly. What will be the priority area now?
So from our perspective, just to give you an idea, Shireen, Essar Oil was about 25% of the group, right? So 75% of the group, which is principally including the oil sector, but also the steel and ports and all our other businesses are still very much there, and we are really looking at growth now in these sectors.
Which looks most promising from a growth point of view at this point?
No, I think all these sectors, if you look at our portfolio, if we see a pickup in GDP in India, then we will see growth in these sectors.
Mr. Gadkari keeps talking about the port sector and the many initiatives that the government is rolling out as far as the port sector is concerned. But on the ground, what are the kind of opportunities that you're seeing? And yes,
ports?
yes.
Well, I mean, look at it this way. Most of these sectors, if you see 7-8% GDP growth, then these sectors will see equivalent, if not a little bit more, growth. There isn't that much surplus capacity left to be absorbed. And so very soon we're going to get to the point where, new investments will have to come to take care of the growth and the demand. We're not there yet, but so the opportunity is in that growth. Which we all are seeing. It applies to the power sector, it applies to the port sector, it applies to the steel sector, because our per capita consumption still, despite everything what's happening, is still very low.
What is the outlook for the power sector specifically? And we've seen this big Uday rollout.
Right.
Whether or not it has materially changed anything on the ground is still a question. In that scenario, we actually haven't seen any fresh PPAs or any significant PPAs being done either. So what is the outlook then as far as the power business is concerned?
So for the power business, I think the one area which is yet to kick in is the significant pickup in demand. And that's what you refer to by no PPAs, etc. And since these spot prices off the grid are so low right now, 2.5 rupees, these state electricity boards, there's no real incentive for them to sign long-term agreements as long as they can enjoy power at these low prices on a spot basis. So we are really looking forward. A lot of the capacity which was built in has now come in the power sector. So that's why we see a lot of surplus capacity for power generation available in the market. And we are really looking forward to pick up in demand, which will then improve the returns in the power sector. Power sector for the last few years has not given great returns for the people who have invested.
Is there visibility that it's likely to see a turnaround?
I think so, because they've addressed the fuel issues, they've addressed the coal availability issues. The Uday scheme hopefully will address the issues faced by the discoms. And if you address all of that, obviously you still need support from demand, and hopefully that it will come this year.